Hello innovators, hope you guys are well, hope you're all having a good day and welcome back to another cryptocurrency outlook. Things are heating up in the cryptocurrency market and BTC has just taken out the all-time high. Now this is the sort of area people would expect me to flip bullish and suddenly proclaim we're going to go to the moon. That's not the case, and actually, in my personal opinion, this has strengthened the bias for a pullback that I am looking for. If you watched the previous video, there was a notable zone I mapped out in the event, which was very possible that BTC would take out the all-time high. That was $112,000 to $115,000. And if we are to see a bigger push here to take out the high, you really want to be looking towards 112 to 115,000 for that classic 2021 situation. Lord behold, when we took out the high, we pinpoint struck $112,000 and have closed back down on a weekly time frame below the all-time high, which was printed not too long ago. Now, there was one thing I also mentioned in the previous video, and hopefully you guys watched it, because that was the total market cap. And as long as that remained within the structure we were looking for, nothing actually changes. As a matter of fact, this is not as bullish as it seems. And to throw out there immediately, in the short term or medium term, the high likelihood is $92,000 to $90,000. And we'll be showing you that in the charts as well. The likelihood is 80K, returning back to the base. And of course, there's numerous psychological factors behind this. And more notably, do I still believe we're going to 60K? Yes. I think it's very, very possible. In these areas, it's never truly visible, but what we're going to set out to do in this video and every future video is on a week-by-week basis, maintaining that higher time frame structure, is breaking down and showing you guys where the large moves can come through. Now, I still believe this is a massive, massive trap. Notably, altcoins will potentially be impacted very significantly by what could be coming from here. If you go back to the previous video, I gave you several zones. Ethereum respecting perfectly, XRP respecting perfectly. BTC did liquidate the high, but that actually strengthens the bias we're looking for. And notably, the total market cap also is now in a very critical region. So during a moment in time where once again, every source of information you consume will likely be encouraging you to buy, we're going to be breaking down why I think the market is going to pull back down and why you are probably going to have significantly better opportunities than you probably realize. So I'm going to stop talking now and we're going to jump into the charts. I'll see you there. Now, jumping straight on to the charts, I really like the look of what I'm currently seeing. And I personally think what we have just seen here is the initial telltale sign of what is likely about to occur into the coming months, and what will likely happen prior to seeing the upper ends of our zones fulfilled. Now, the most important thing you guys need to be watching for here, and hopefully paying attention from the previous video, is the all-time high liquidation. Now, there are two zones I provided here, which was 101,900 to 105,000. We broke above, came down and rejected, and this is something for future reference, by the way, for anyone that's new or maybe just hasn't really noticed this. The zones can be used back and forth for even your own intentional trading purposes. As an example, broken above, rejected, and into the next zone, which we have literally pinpoint struck at $112,000. And that is exactly what this zone was here for. Now, in these moments, the previous video started getting loads of comments. We're at all-time highs, you're wrong, you're wrong, you're wrong. But actually, no. And as always, gauging the comments that I get in those moments really confirms things for me, because the moment more comments came in, the market pulled back down. And that is the psychological aspect of the market coming into play, where people do not wait for those weekly closures. And there is a reason I use weekly and monthly closures, and weekly and monthly charts in particular. It's because so few people use them and so few people have the patience to wait for these things to come through. Now, with where we're currently trading, there are many things to look for here, and notably in classic cryptocurrency form, the moment we broke through that high, the bullish candles came through. Now, what we have seen here is the first bearish engulfing candle of the entirety of this trend, and you must ask yourself in this moment, who is doing the selling here in such a large uptrend where the entirety of the crypto market participants have been swayed to the upside. And of course, notably here, if people were patient, they would have seen we closed below that high. Now, this actually increases the prospects of crashing for me. And I'm going to bring the charts back to white because we do not need emotions in this area. And there is something I said in the previous video that you need to really understand for your own personal benefit in the future as well. Now, if you look at all the zones provided, Ethereum is still in that zone. The trend line can go for now. That zone is held up well. XRP has actually started pulling back already. In fact, let's bring Ethereum to the weekly time frame as well. Now, I have a nudge here that Ethereum could still push higher, notably between these two zones. I don't have a concrete reading on this, but I do feel from the upper end, it would be a potential push that could literally happen in a single weekly wick or so, or on a monthly time frame. So around 3,000, 3,300. But we can currently see the zone provided as reference for this move up on both sides is currently holding. Now, the key here, guys, is to understand what I've been saying regarding the total market cap, which done the exact same thing. We drove into the zone, rejected and pushed up into the next zone. Now, this zone is absolutely vital, because although BTC has pushed the high, the entirety of the cryptocurrency market currently remains in a downwards trend from obviously this high over here. Not overall, do not get that mistaken. We are still in an overall upwards trend. Now, there is something very important about this level that must be considered, and in the event that BTC takes out the all-time high, but the total market cap remains situated in this area, it is never usually a bullish sign. And in fact, BTC here taking out the high has done something very, very specific. It has taken out every single shorter. And most people in these areas will not be looking to short anymore. And this has been a very significant rally to the upside. A rally, quite frankly, with minimal pullback as we've been highlighting, which means as quickly as we came up is as quickly as we can come down. Now, something else to mention here, which has really revolutionized my investing and trading, is when you see a rally like this on BTC, do not look at the fact it's moving up aggressively. And this is a bit of a mindset trick, and I'm going to bring the colors back for this very quickly for you guys. But in these moments when you really zoom out, and it's also very important to zoom out and compress the charts as well, because what you see here is now almost becoming a mirror of what we have seen before. And notably, this creates a very specific framework. When the candle on the weekly time frame liquidates an all-time high and closes below, that is often a very, very strong sign. It was nothing more than what you guys who have followed me for a while will know as a wick fish, where it essentially drives up, liquidates shorters or longs on the opposing side, as an instance over here. We liquidate, we wick fish, we close up above, and this can often become the groundwork for major reversal turning points, as we see here as well, just to highlight a few examples. The market is continuously doing this, and specifically when this happens in these areas, this also happened right here during inauguration. And now that we have seen this, there is only one thing I am really considering and watching in this area, and that is the possibility for this weekly candle to just drive up one more time into the higher end of this zone. Otherwise, from where we are right now, we could already begin to see our turning point. Now, we are not just at a crucial weekly level, but what I feel here is the weekly candle has already provided the initial confirmation for what is likely going to initiate over the course of this week. And what you also need to remember is the monthly candle is closing in 3 days, which means within the next 3 days, specifically if we start to see some form of deeper pullback, and you must remember, what did we cover in the first video we made? The month of May, we are looking for a squeeze. This is the month of May squeeze. It looks currently identical to what we saw here in 2021. Now, the only difference with 2021 is the market topped. I personally feel we haven't topped. And as you guys know, I think what we are due to see is a pullback, predominantly to 80K at least. But I actually think 60K is more possible than ever. And what I am obviously expecting from there, just to illustrate again, is quite simply a pullback down to the ground level first, with the initial levels I've highlighted, with a possibility now increasing to come into this level. And what we want to see is either from here or here, notably should put that more towards 60, a continuation for the finale of what this cycle will likely end at, between 130 to 150k. Now there is a chance it may not even need to go higher. An alt season could potentially even take place upon this crash from BTC rejecting this level. That is something to consider, and that will be later down the line once we get the pullback. But what you must remember is the market is most manipulative in the final moments of weekly closures and monthly closures. And this weekly closure closing below this all-time high is now setting up what I believe to be a trap. And you want to use this same zone at the moment as a reference point for where we could close on a monthly time frame. And if we specifically see this, and we see this weekly candle pull back down into this area, especially by monthly closure, that will be one of the strongest signs. All we will then look for is the possibility again of driving up the following month to this high, if not slightly taking out this high, just as we saw over here. At the moment, it's seemingly an identical mirror, almost identical. Now, this is going to raise further questions as well, but going back to what I said, psychologically speaking, do not look here at the fact the market's rising, because narratives will increase, and naturally, when people begin to buy and go super leverage long into these areas, they will join the herd of echo chambers for these narratives, because they now need to believe, due to the financial decisions they've made and the executions they've placed within the market, they cannot afford for the market to go lower. And to make these executions and decisions, you must be blinded enough to believe it will go up forever. But this is very dangerous. And instead of looking at this as a major rally and a bull run and the breakout to the moon, instead ask yourself, why is the market driving up right now? This has honestly changed the game for me, and something I applied many, many years ago, specifically from 2020 onwards. This was something that really woke me up in 2020. And quite frankly, this is something I've been saying to the members, I almost have that COVID-like feeling returning once again. And as a matter of fact, in the headlines as of present, COVID has started returning. Now, I don't know if COVID would be a contributing factor, but it is something that is beginning to spread, mutate, and apparently increase. Hospitalizations are beginning to increase. Now, it obviously hasn't got drastic yet, but this did happen in COVID. And it may not be this, but again, what you must look at here is, why is the market being, in my opinion, artificially inflated during this moment in time? The same way it happened here. This was not bullish in any way, shape or form. And notably, with the characteristics of what I believe is going to happen, quite simply, at the very least, we should be able to get back down in this region. From here, we will assess the plausibility of holding this level, and I'll show you why in a moment. But before something very bad happens in the market, those who have the influence, power and capability to move the market will often drive it up. And why is that? To generate exit liquidity. This has now essentially killed two birds with one stone. Anyone that has been short, not probably from the very high, but more notably from the bearish candle, the bulk of those shorters are finito, they're gone. And not many people will be willing to short here anymore. You will always have the courageous degens, and their stop losses will likely be situated in the $111,000 to $112,000 region specifically. This is why I believe one more pop-up could essentially emerge over the course of this week into the next month. If it doesn't happen this week and we start to drop down for the monthly closure, we then need to consider it just for the following month of June. Driving up like that, and likely dropping straight back down into the 90, if not into the mid to lower end of the $80,000 region. Now, as this is beginning to get propped up, this is where danger often emerges. And it's in those moments where everything looks so promising, so good, so fantastic, that you almost think to yourself, what could possibly go wrong? And that is coincidentally often the moment in time it goes horrendously wrong. I've shown many examples of this, but even here, before we had the bigger crash, do you note how the market drove up aggressively first to sway the sentiment in the opposing direction? The same happened here. We drove up and took out the highs, and every single person switched from complete fear to greed again, no longer looking down. And it's at that very moment something bad happens. And notably, during the COVID area, we rallied before the COVID crash. And I often ask myself the same as every other time. First of all, markets do not move up in a straight line. And when they do move up in a straight line, they come back down just as hard, notably here. Now, in this particular area, as this is happening, and we look at the cycle patterns of what often happens in these areas, I do not look at this as a promising sign. I look at this as a very dangerous sign, because what can often occur in these areas is unexpected, theoretically a black swan. Now, you can never predict, as everyone says and knows, a black swan, but what you can predict is that something along those lines can take place. Now, it will be considerable in terms of a black swan because you never know what's going to cause it. And I'm throwing out different theories from what I've seen in the news. It could be war, it could be anything, but there is always something. And in terms of determining what the actual black swan would be, you will never truly know. But if it's going to happen, it notably begins to take place in areas like this, which is why I want to throw that out there, because it's definitely a possibility. And it takes one singular thing in this area to completely U-turn and reverse price action. And notably, this often happens when the total market cap moves in this particular way. When the total market cap remains in complete structural integrity of what is currently a downwards trend. Again, if I am to illustrate this for you guys to understand, you must remember one more time the overall trend here in play. Just to quickly draw it like this. Let's use a parallel channel. Just to show you quickly, overall trend is up. Within the overall trend, which will quickly make green, we have overall bearish trends, such as this. And this creates the framework for where we are currently trading within. Now, notably, in this one here, I should stretch that out a bit further. This will actually become pretty much a fundamental basis point for what we're looking for as well. Now, in this area, the same is applicable in theory between where we are now to here, and we can stretch that out the entire way. It's essentially a larger scale range / downwards channel. It can be drawn in various ways. It can even be drawn like this, just to give you a bit of an insight and illustration into what I essentially see happening here. I'm not sure why that is not duplicated. Let's go ahead and do that again. And let's visualize it like this instead to help provide a bit of a clearer picture. Now, in this overall area, once the breakout occurs, the market can often come back at the very least to reject this trend line before continuing the trend higher. And of course, dragging this further, that is where I want to start seeing the sweet spots begin to come through, where notably, I believe the total market cap will ideally reach into the 4 to 5 trillion plus range. That for me is going to be cycle completion territory. But what we also want to wait for here is the total market cap to potentially come back down, even by monthly closure, into this particular area. I do not see any change whatsoever. And if we then zoom into both of these charts and look at it like this is notably in the most vital level, because whilst BTC has driven up and liquidated that high, almost mirroring the classic 2021 play, notably Ethereum and XRP. I'm going to zoom this out a bit for you guys and go to the monthly time frame here as well. Notably, as this has happened, Ethereum has obviously come in to the deeper extent of its broken trend line here. That is a broken bullish trend. The market swings up aggressively to reject that trend and often can pop up one more time in a massive final wick, just as we've seen over here time and time again. Now, when the market comes in to reject these trends, this is often the greatest trap, because when the trends break, everyone begins to short. But what the market often does before continuing back down in that designated direction is swing up to reject the trend line with a few nifty tricks. Now, notably, as this is here, we've also liquidated the bearish candle on the total market cap chart. This high has been liquidated. Now, I believe, as you guys know, we are going to see one of the greatest alt seasons and likely the finale of an alt season. Now, as we watch this push up higher on BTC, I actually think this theoretically also strengthens the idea that we are going to see a great alt season. Because what most people will not be looking at, and instead will be looking in frustration right now, is that BTC is near all-time highs and is ripping higher and higher. What you must remember is this has now theoretically increased the amount of profits that has been generated from Bitcoin. What happens with every single alt season? The capital flows through the food chain and down the system. It used to be BTC, F, XRP, and pretty much everything else. Things have been a bit different this time, and Solana has played a major contributing factor. But if you look at this logically, this has now increased the amount of profits that have flowed into the market. Therefore, there is now more capital, and if we begin to get the pullback, and especially if we get the confirmed drop, this also kills two birds with one stone. Whatever may cause it, there may not even be a cause for this. In fact, it could pull down naturally, and then something bad marks a bottom to bring it to 60. That's especially what I'm considering here. Now, when I say this kills two birds with one stone, should BTC, considering we can get one more spike up in the following month, or this week if we're lucky, should this begin to trickle back down to 90, if not back to the base around the 80 region between these two levels? Notably, several things will take place here. The move down would give you the utmost confirmation that BTC profits have been realized. Due to the rising BTC dominance, which I believe will go to 70% plus at the very least, will cause the total market cap to come back down. Notably, that would then cause Ethereum to come back down to around 1800 to the 1400 level again. This would notably bring XRP back down to where it was around 1.6. As we know, that's currently where the bottom lies. So if you compare the two, this looks massive, but it's not. At the moment, if we go over to the BTC dominance, notably 63.92% of the total market cap is currently all BTC. So the bulk of this movement is not everything, and it can seem more excessive. So you can look at something like F or XRP and feel, well, why the hell are they not moving? But that's because most of what you see here is just a slightly more compressed version of what BTC is doing. BTC essentially compromises almost 70% of this total market cap. This number here, the 3.38 trillion, is predominantly BTC's market cap, and the remainder is all the other altcoins. Now, as long as the total market cap remains within this territory, this is nothing more than a retracement and a rejection of key resistance over here. Where the sell-off occurred is where we've driven back to, and logically, the same can occur to the downside. Now, the key to understand this is to delve even further into something I've been looking at recently with the members, and that's the liquidation charts. Now, we're actually going to work our way down from the highest of timeframes. Now, this was a real eye-opener for me, because notably the bulk of those liquidations, we are talking 11.84 on just one singular level, has been liquidated. And notably, whilst there is a little bit of a ray somewhere up in, up to the 114.15 region, which can often happen in a quick spike, the bulk of this now, due to the fact this rally has occurred with minimal pullbacks, highlights very specific areas around $105,000 down towards that $92,000, $90,000 region I mentioned in the introduction of this video. And notably, as we go lower and lower, the bulk of this now remains to the downside. So what I believe is happening here, and why this high wipe is essentially a contributing factor to a bigger rollover, is because it's no different to what's happened before. The market has essentially driven up and wiped out all of these shorters, driving them to a point where they are going to be forced to switch long as the highs break and the all-time high is broken. Notably, as this happens, you would be surprised, and although we know it's absolutely stupid, The moment that candle breaks the all-time high on a daily time frame, which is why we view this on a weekly time frame, the moment these candles break, the most long positions are opened because people try to capture the breakout to the moon and $1 million, etc. Simultaneously, a lot of people spot buy there. Now, for a move like this to come through and counteract the very strong uptrend, imagine how much BTC spot, OTC or not, on exchanges was sold to cause this sell-off. And notably, for such a thing to be achieved, that is why they call it exit liquidity, because this is what generates the buys that allow the whales to sell and bring the price lower. This is what allowed them to achieve this, and notably, for such a significant amount of BTC to be sold to cause this move down and counteract some of this trend in the current phase, you need a huge amount of people willing to buy. And that is the frequent trick these markets deploy. It's encouraging people to buy. And notably, if we get another spike above this high, this will just amplify the effect tenfold. And notably, when things begin to reverse, it's often in these sort of areas. Now, if we go back to here, first of all, same concept was also applied here in a very similar way. Broke above, another drive up higher, everyone's watching the daily time frame breaks. And the same also occurred over here back in 2021. And that is why I do not trust anything that is currently happening here, and in fact believe it's a greater trap. Same applied here, bullish candle, crash down. What happens again? Bullish candle. Why are those candles deployed? And again, we know the markets are rigged. If you do not believe the markets are rigged at this point, I have nothing to tell you. But notably, those daily candles seemed very, very strong at the time. But what they inevitably ended up becoming were nothing more than wicks on a weekly time frame. And that is essentially exactly what has happened here. In that moment in time, when that drove up, no one's looking down. And then Friday, Saturday, Sunday, as weekly closure comes in, it drives back down below the high. Simultaneously, as a monthly candle is now on the cusp of coming through in 3 days and closing, the same could be applicable here. And this current chop we are seeing within this region, I want to be open-minded to the fact this could happen this week, which will maximize the amplified move to the downside, or simply drive down to this level, possibly by the end of the week. Now, here's something to really pay attention to here as well, and that's this trend line on the cusp of breaking. As we are at the squeezing point of this level, why I'm open to one more wipe of the highs, and that's what this zone is here for. And the reason that zone is applied is to show you that whilst BTC breaks the high, this remains in construction proportion to essentially still drop back down. It's just a rejection, and in fact, it looks kind of similar to what happened here as well. Slammed down, swung back up. BTC at that point in time was obviously pretty strong as well, don't get me wrong. Let's go back to the monthly time frame there. But BTC over here did push up a little bit further. Notably, why this is even higher is because the BTC dominance is the highest it's been in ages. But you must not view this as bullish right now. And what could also happen here is if we start to pull back down, the same way I would like to see BTC, if you're going to see a surprise closure by the end of the month to really amplify and strengthen the probabilities, you want to use the original zone of 101,900 to 105,000, and simultaneously the total market cap. As long as that remains within this zone, I'm not concerned at all. If it closes in this zone by the monthly, that would be a bonus. But generally, if it can maintain in this level, that's good enough for me. Now, looking at XRP in a similar way, and going back to what I was just showing you about a plausible pullback somewhere within this level, over here, and over here, that will be a great opportunity in itself. But my concern, and number one, if you want to see something really simple, the CME chart is the easiest foundation. Before we go back to the liquidations as well, the CME chart is the easiest foundational standpoint to really gauge where the market's likely going to go. And notably right now, there is a huge gap pending at around $91,970. And the moment you see a CME gap of this magnitude, specifically on a daily time frame, in fact, I have every gap pretty much mapped out. There are more, but the notable ones on a daily time frame especially are the key to understand. Not all of these are major. I do believe these will be filled at some point, and even these will likely be filled. But in the notable short term, as an easy way to understand that we will very likely go back down at least to this level, there is a gap here on the daily. Now, how we know these often work is because they always work over here. How did I even believe we would get down to 80,000 from up here in the first place? That's because there was a major CME gap there. And when the market breaks away, people go, oh, that's it, it's never going to get filled again. But no, look at this in the opposing way and understand that if a gap remains left behind, that is your indication that these rallies will be short-lived, and it does not matter how much higher they go. There are numerous examples of this time and time again. There was one here, drove up, bang. Then there was another one there. So when you crash, you know it's going to come back up. Simultaneously, there were a few others lingering in this region as well, such as there, easy peasy, lemon squeezy. You see it breaks, oh, massive bullish candle. Guess what? It got nuked straight away. Now, the only difference is there is minimal here for me to really believe it will predominantly hold up in this region. And this is more of a checkpoint and understanding from the offset that the market likely needs to go back down regardless to this level. I just think if we're going to make it down to this region, knowing that this trend line I've just shown you on a daily time frame is going to be broken in that circumstance, well, the trend essentially ends the moment this trend line breaks. Historically, notably, that is always the case every single time. If you go over here, the trend was broken there. That may lead to a swing up higher, which could possibly be June, but that's broken. And notably, the strongest of the trends. You really want to go for the depths of these trends as your indication. You see here, the moment that is broken, or even this one, it will push up higher, and there's certain technical tools that we teach to show you how to identify where the pushes up will go. But the moment you see that trend broken, it is over, essentially. And there will be attempts to potentially push higher. They don't always happen. But here is a notable example. We are, quite frankly, a singular sweep down on a daily time frame from breaking. So the moment that is broken, it's pretty much over, really. There may be a swing up, and that's what this area is for. But that is your notable sign. And of course, if that is going to happen over the next few days, that will bring the monthly closure down as well. It is really a beautiful area to be in. Now, from a more simplistic basis as well, for me, it's notably this trend line, which I think is the key foundation for where we are. Again, I think it is criminal from a higher time frame basis, especially, that such a trend line will not be fulfilled. This for me is a bullish trend line. It's a clear indication from a higher time frame basis, and this notably brings something else into question as well. The first thing to watch for is the current trend line, which is here, which also aligns with the levels we're looking for. I think this is the simplicity of the process. Spot buys for me will not be considered unless we come back down to here. Now, you may think, oh, but what if it never comes through? That's fine by me. I've got positions in the market already. I will not take that risk here. And if you do so and consider what I'm showing you, and it doesn't work out in your favor, you will not have money left to leverage these prices. And this is notably the first strike point. I think we're going to break, but we must assess this level once we get there, which I believe could come through relatively quickly, specifically with the strength of what could plausibly be a potential closure below the all-time high again. That would just really, really maximize things. If not, we would have to assess a little squeeze higher. But for now, we remain in complete structure and proportion. This is your calming agent. I think we're going to break this, and I'll show you something else in a moment as well. I think this is the key catalyst for what's going to happen. And notably, if that is the case, going back to here, the correspondence for that on the total market cap chart would also be the same trend line here. And what that basically tells us is if the total market cap is currently within this area, also just watch for that trend line spike. That's what we have a zone up to 3.62. That is a reference point for us to understand if this pushes up further, all of these could pump up. Now, what happens if we see the total market cap drive into this trend line? likely spike up and hold it and slam back down. What would that do to altcoins? Just watch for that move up to there on Ethereum, which could come through next month. A monthly drive that bolsters higher, final surge of FOMO, slams back down. XRP, back into the range up here. 302, call it $3 to 3.25. Now, obviously, if that's the foundational bottom point that we have as a reference, what happens if this breaks down below? Well, that's where you look at XRP, heading back down towards $1. That's where you look at Ethereum, coming back down to liquidate the $1,000 low over there. Now, when I say kill two birds with one stone with the BTC idea as well, just to mention this very quickly before I go to my final pointer, and I hope this is all making sense at a time like this. I just feel, as always, it's not easy to come out and say this stuff, but this is legitimately what I see. And it's always going to get backlash. But let's be real, where is the backlash coming from? Is it coming from people who have sufficient investments within the market or are investing with sufficient size? Or is it people that obviously and normally hide behind profiles or have probably just gambled everything all in? It's normally the case. You do not see successful traders counteracting or denying such possibilities. It's only from a certain demographic. And again, unfortunately, crypto is just a bit childish. But going back to this, should we see this? You have your first sign. BTC profit taking is complete, and this was deployed to bring it back in. Now, if this is enhanced between these two levels, wherever it may be between these areas at the moment, I'm just telling you, I think this is more possible than ever. If that happens, altcoins will die simultaneously, but you must not get scared in this area if that happens. Because if altcoins drop, factoring in the extra squeeze that can come through, this would just allow them to catch up from a fairer standpoint and fall from a fairer standpoint, just as they're doing now. Let's say altcoins nuke as a consequence of this. That shouldn't scare you, because you now know there is a fresh batch of BTC profits being taken in this area, which will likely be recycled back into the market if these drop back down to there, if not lower. If XRP drops back down, what is going to prop them up? Well, fortunately, a bunch of very wealthy people have already started capitalizing on all their money and all the profits from this BTC rally. So when you look at these altcoin drives, they are theoretically and essentially catching up to fall from a fairer standpoint. That is another psychological trick to look for when the general structure of the market currently remains downwards. What is going to save them if BTC drops and they fall with it? It's the BTC profits that will be cycled back in. Now, I've been talking about a major capitulation / liquidation event, and notably some bad news such as a COVID-style situation or anything remarkably close to that sort of predicament would cause a huge catalyst for fear. And especially if we see any form of bad news such as that, look for 60k. If there is just a general pullback, we should be safe in the 80k region. But if they decide to deploy the classic, the reptilian lizards, those people, the ones that, control life and the world and the universe, if those individuals decide to deploy another one of their classic dystopian agendas, then absolutely easily the 60k threshold is what we want to be looking for here. And this is going to be the same case. And notably, this will happen even if, and what will be a very dangerous sign, is if the total market cap wipes the high as well. That would be full-blown terrified shit, basically. No other word but shit if that happens. I would be very scared for the sake of humanity. But generally from here, BTC is often the catalyst for this situation. Now, alongside this, knowing that we have just risen up and there is a chance, which I feel a great chance, the market can go lower, you want to take into consideration what 99% of retail traders are doing. Again, I'm a retail trader, but I'm not doing what I am seeing most people doing. And that's over-leveraging and buying altcoins because they've started pumping. Should this pull back down now because people believe the bottom is in, and the actual bottom is created, hopefully near that 60k region and breaking this low, Remember, psychologically, a floor has now been embedded. So as this comes down, you also need to consider this is too easy of a bottom, psychologically and technically speaking. Although people will probably not have much left from this, and the fear of liquidations will scare people, everyone will look to so-called buy the dip here, which means this current psychological threshold, considering people believe we're not going 70k again, if this is broken and the moment that low is broken, people will shart their pants and diarrhea will be trickling, if not streaming down their leg. Because in that moment when something you have not perceived comes through, especially if in a rapid fashion, you will be terrified and you will panic sell. This is what causes major capitulation, and it's why I believe this area could be vital for that, because not only would this then achieve the break of this low, but it would probably rapidly break the 70k threshold. Once that's broken, if broken, you already know most people will not be able to comprehend or think rationally in that moment. But that would probably be where the market drives in, closes up above, and returns back to the highs. And if we can successfully see a capitulation event of that nature, you already know it's when the market looks like it's never going to return again, that it's going to actually trigger the alt season, and that will be the finale of the cycle. If something bad can happen, do not be surprised if they also start aggressively cutting rates, and all the usual malarkey they're saying won't happen now. Things change at the click of a finger, and the same way you may have been terrified here and FOMOing here, the same applies on the way down. And it's for this reason I do not change my views, because the market has not provided me a reason to change my views. If I am wrong, then hands up, no problem. But right now we are moving flawlessly in line with expectations, quite frankly, and seeing the extra nudge here, which I know has taken people over the edge to believe it's now a guaranteed movement. I like this more than ever, actually. And the fact we've held this territory is gorgeous. We want to watch out for a cheeky spike up higher, but otherwise, I think this is currently looking remarkable. And we want to at least be looking back down to where this all started, at the very least. I think that's safe, logical, and plausible. That's not insanity. It's nothing crazy. And if anything, maybe not BTC. Again, I would not buy BTC at 60k myself, because why would I want 100% potential ROI to 120k when even F can give you that much better at 1500 to there? If you look at F's move, it's essentially almost $100, 100% ROI, sorry. BTC is what, like 50%? I'm not taking that risk for 80k, and that's the problem. Unless you're already wealthy, you should not be buying BTC anyway, unless you want the more guaranteed return. But the percentage game, especially if dealing with less capital, unless you're dealing with hundreds of thousands, if not millions, BTC is a rich man's toy now. You don't really want to be aiming for that. And you also don't want to lose all of your capital in the event the market rolls over before a real alt season actually begins. Now, my views remain the same. I'm not too sure about XRP. I don't know if it's going to do much upon this happening, because we've seen before, should this drop, I don't think it will do much more than retrace the move, maybe take out the high. But it will be the contenders that haven't actually done the XRP style rally yet that truly flourish. And I believe Ethereum is one of those, and Ethereum would be the major contender for that situation. I'm looking at this collectively and just thinking, what the hell are these guys cooking? What are they trying to make us do? Notably, judging from the Fear and Greed Index, which recently hit extreme greed as well, it's straight up euphoria. When the market hits peak euphoria and extreme greed, we know there is a greater opportunity for the opposite to happen. Now, something else to show you very quickly as well. Using the same trend lines and guidance, again, simple stuff. And by the way, there was a comment on Bernie's recent FX video, which I would also really recommend watching. Really recommend watching. Crypto or not, make sure you watch that video, because it's a very good psychological perspective of how the markets operate as well. But someone commented and said they liked Bernie's color scheme. So something the members have also requested is to go back to the OG innovation color scheme. This is something that we pretty much started the channel with, and I will be more than happy to bring it back if you guys want. If you could leave a comment and just let me know which color scheme you prefer. I personally love this color scheme, and I'm slowly evolving back to it. But for the sake of the YouTube video, I've left it all clean like this. You're going to have a quick glance back and forth, but I quite like this, quite frankly. I really, really like this. And again, it illustrates just quite clean what we're looking for. No color, no emotion, just some colored wicks for a bit of jazz. Now, if this is to be the case, what if, notably, this also brings into question something else to consider. If this monthly especially closes below this level, then what we are actually within here is a major, major range. Now, this is also very similar to what has happened time and time again. Kind of similar to what Bernie's covered in the course lesson, to be fair, or his educational video. Once that high is taken out, if the monthly closes below, this becomes a massive monthly range, which immediately tells you, regardless, that we are going to break that range. And what becomes the bottom is the squeeze of the range. This is how the market often operates. And through all of my color schemes, there we go. We're going to go for this one. Do you see how this works? Took out the high, came in, floated away, kind of similar to what we're seeing here with here, and then comes in to break the low. And it's from that break the bottom actually begins to form on a higher time frame basis. Now, if we are to apply that even over here, whilst we didn't break the high, it's a very similar concept. We came in and instead took out the low. The high was remaining. We then bolstered through. So theoretically, this is almost the equivalent of what I just showed as the white zone from this area. This is the squeeze through that zone. But if we bring that back and understand where we are, well, if the high is now being taken out, and we consider one more high could come through, 115, 120, who cares? Higher time frame bias will allow you to stay much calmer, no different to what you see here. Now, logically, that means this low will have to be broken anyway. And then the new zone comes into play, and it just so happens, call it this major zone from here, I would at the moment look around that low there. That then brings us into the same territory, where the break of this range to the downside, on a weekly time frame as well, you can already see this pretty much formulating in the present moment. This would allow us to understand that any break below this low is not bearish. And the reason I am showing you this is because if it happens, 99% of people will capitulate, sell, and lose everything. And obviously, as you start to near such a territory, most people will also short the living hell out of it near the bottom. It will liquidate, capitulate, and ruin everyone. But actually, this trend line here on a higher time frame basis clearly illustrates, alongside the fact this is a key threshold. Remember, we've only just broken this threshold and tapped. We haven't even truly tapped it from the actual closures. That already tells you 70k is outstanding. But should we see the break through, you want to look for that trend line, because that will be the activity in the lower end of this zone. And I believe that will be the activity that, number one, brings us back up to 100k at the very least. And depending on what happens with altcoins, either alt season takes place here and the cycle tops from there, or we go in for the full Monty and start to break up higher one more time. And if something like a black swan or COVID or whatever nonsense they come out with causes such a thing, the rate cuts will be likely deep, aggressive, and very sexy. That will, of course, contribute to another bubble. And what I believe would then be the finale of the bubble, where the alt season takes place, the stock market continues higher after a sufficient wipeout. And of course, what then becomes a question of the crash. And for me, that would be the entirety of the bubble imploding. That brings into question the new stablecoin regulations, Tether, Michael Saylor. Strategy is a big question mark to me. Could be the next FTX. There are many factors that are not yet confirmed that we already want to consider from the offset. And all of this is shown to you just in case, and in the event I believe this will happen, it's to keep you calm and understand in that moment, should you see what I'm telling you unfold, I want you to be calm and I want you to be confident. And this is how we do this. This is how you capture optimal bottoms. It's by being alert, it's by being sensible and being rational and not falling victim to emotions at a time where everyone around you is going to tell you to be very, very vulnerable to your emotions and join the herd. It is not easy doing this stuff, knowing it always gets retaliation and backlash, but when it comes through, it's those people that mock you that wish they listened. And when people often say to me, you're sidelined, which I love because it's the most NPC thing you could say, those are the very people that pray and wish they were sidelined when these things happen. And the key to understand behind this as well, keeping it just very simple, is you need exposure to this market. If you are not exposed in any way, shape or form and do not hold anything, then I don't know what to tell you, because even I am, despite the bias I am looking for. But I always ensure cash is kept on the side for the sake of these opportunities, because this is the difference between 50% to thousands of percent, specifically on altcoins. And I think should we see this series of events emerge, it would then basically lead to the remainder of the year being incredibly, incredibly bullish, and inevitably the finale of the cycle. And obviously, once that begins to come through, back down, I believe, and something very, very bad could happen. I'm talking societal resets, I'm talking crisis, I'm talking recession. But the same way I'm telling you here, we need to drive up to bring in FOMO to essentially come back down to the ground level, if not lower. The same is applicable on a much higher time frame scale. If you see something like this, obviously at that point, you begin to believe that BTC is never going down again. This is the asset class of the future. No doubt, Michael Saylor will probably buy some more at the Pico top, just as he's doing now. I don't know what that man is cooking up. The strategy behind strategy is a myth of many proportions. I don't understand that man. But what I do know is when he keeps top fragging, just straight up 360 no scope in these highs, you need to look at that as he's telling you to buy, same as the president, and think, what is this man planning? What is this man's motive? As always, these people are not your friends. And if they were your friends, you wouldn't have seen this after inauguration. And Trump's meme coin would not be trading near its current lows. If these people actually cared about you, they probably wouldn't have allowed, knowing they have influence over the markets, for these things to happen. They are not your friends, and your losses will always be their greatest benefit. And once you understand that is how the world truly operates, you learn not to place complete blind faith in the things you currently see, especially when the markets move up like this, because in a stone's throw, in the next 3 days and 12 hours, we will have more confirmation of this. But for me, overall, everything remains the absolute same. There is definitely a bit of leeway on XRP and Ethereum as well, but otherwise, I'm sticking to my guns, man. I don't see any reason to change. I won't let a bunch of bulltards, so to speak, change my opinion otherwise either. I think this is a rather rational perspective, if anything, and when viewed from this manner, my goal is essentially to show you my perspective of the market. That's all it is at the end of the day. It is, we all are looking at the same charts. This always fascinates me as someone obsessed with psychology. We all have access to the exact same charts, yet we all perceive them in different ways. And this is my perception of the markets. So I hope this has gone a bit deeper than the previous video as well, alongside providing an update. Of course, I may even provide an update sooner than next week once we see the monthly closure as well. But now that I've given you a rough idea of what to generally look for, we should wait for the monthly closure first to continue with this assessment. And as always, on a week-by-week basis, this will essentially now become a journey amongst the markets together. If it invalidates, what do I do? Well, I'm positioned enough to make money if I'm wrong, so I'm not too concerned. But obviously, what I will do is reassess, reevaluate, and come back with a new plan. Regardless of that, money will be made. And that's the goal of this game. I don't really care about being right or wrong. I care about making money and not losing money. And as long as I can continue doing that for the rest of my life, opinions, biases, bullish, bearish, means nothing to me.